Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, let's update our review on the gold market. So gold currently is a very interesting market, not just because of the performance and trading opportunities, but also it plays in global political and economical processes that we see in the world. So in today's weekly report, we have touched a bit specific topic that is not visible widely in headlines, in the news, in the mass media, because this topic is disguised by some news that, well, mostly shed some light only on the surface of the processes, while the core of the processes, the major idea of all the things that we have, stands in shadow and is not made public by the news agencies. I'm talking about the trading war with China. So it has started from the Donald Trump era, and actually it is lasts till now. And what we see currently with the things that's called widely as bottlenecks on the supply delivery, this is just a part of the war. Although you could read in the news that this was a conversation between Joe Biden and Xi Jinping, and it seems that everything goes to resolving of the tension, but this is not quite so. So Donald Trump, it's really wrong to think that Donald Trump was so stupid that he has started the war while the Joe Biden is ready to close it and to final it. Absolutely not. Because to survive for the United States, it is crucial to put down the major opponent in the economy sphere, which is China. And they will make lots of efforts to achieve this target. So we could see lots of steps that are going currently in this direction. And this is the crucial topic for the gold, which means that we are dealing not only with some inflationary processes, with some expectation of the Fed policy, whether it will become more hawkish in December or not. All this stuff is very important. And we also talked about this in weekly report. But we also discover this, let's call it indirect factor that really could provide big support and a backwind to the gold performance within the year or even longer, depending on the success of the United States in a trading confrontation, economic confrontation with China. So if you would like to read more about this, we'll call you to read the report, make your opinion. So this is a really wide topic for discussion. It's really interesting. So maybe you will add something really interesting to the knowledge that we have. So we think that it might become the dominant factor for gold performance. But this is mostly what it stands in relation to the long-term analysis. In the shorter term, we guys in general following to our trading plan. So we said that we are waiting for a pullback here, and we still treat this as a retracement because we expect that gold should reverse to the upside in the nearest time, because in general we expect, and markets mostly expect, strong inflation data in the coming month. So before the December meeting we should get few releases of the CPI, PPI, PCE indexes, so all of them promise to be being higher, or at least at the same high level that we have. And all this stuff will press on the Fed. Fed currently actually has tightened hands and can't just freely significantly change the rate because they need to recover the jobs and employment. And that creates very positive background for gold. From the one point of view, you have the rising inflation. For another point of view, they have the low interest rates that is held by the Fed activity on the market. This leads to the strong downside action of the real interest rates. For example, I will show you in the chart that we have, this is expectations of the inflation, 5-year forward inflation rate, and that is real 30-year interest rates yield. So you can see last week the real interest rates has dropped even more. If you put here the gold performance, you'll see how tightly related the real interest rates we already have shown you with real interest rates. So you can see what is going on the gold market in relation to real interest rates. So, and the fact that market could stand here or even drop more if we will get strong inflation numbers support gold and promise for the gold to let gold to move higher actually. That's what we're waiting for in the nearest term perspective for a few months probably. At the same time, in a very short-term perspective, while we're watching for a pullback as well, for instance, you will take a look at the 10-year yield, it's nominal interest rates, daily chart. You could see that market has formed a bullish grabber recently, and it suggests that market could move slightly higher, taking out of this top, which actually support our idea of the possible deeper retracement here. So you can see the first downside action already started, but we're watching mostly for an area around 1830, retesting of this strong support area, retesting of the broken trend line. So somewhere in this area, we will intend to consider any bullish signs that market could form here. On the 4 time frame chart, as you could see, the flag that we discussed has been broken down. So although on Friday we said that currently market keeps both scenarios valid, so it could start upward action immediately, or it could show deeper retracement. So that's obvious either to the upside or to the downside as usual. But you can see even with the fluctuation around the support area on the hourly chart, there were a lot of nice pullbacks that actually, if you take in the long position as we suggested here, this probably was enough time to protect position with the break-even stop because the pullbacks were really significant. So it's approximately for $10 per contract. It's really big jumps. As from here, as you can see, this level as this one. But still, because of the retail sales release, it was positive drop on the initial claim, so that was some pressure on the gold market and technical reasons, as we said. On the daily chart, market was on the rebound, hitting the OP. That's technical reasons for at least minor pullback. So currently, we intend to watch for this scenario, and the market is already at the OP, but we're mostly interested this XOP by a few reasons. First is a grabber on the 10-year yields, as we said, so market could keep going lower. At the same time, even on the gold market, you can see that the sell-off as here, as tail closing as here, was relatively strong sell-off. So chances to reach the XOP seems not really bad. So it means that the next week, our primary objective is to watch for agreement, the 1826, 1832 area, where market theoretically should form some bullish pattern, reversal patterns that we intend to use for taking the long position. So that's our basic scenario for the coming week. So let's see how it will turn.